Welcome to the video. I want to make a quick video today talking about the current state of the market. I'm not saying this macro isn't a bad thing. The war is bad. Oil prices will cause inflation, but we will get out of it. Maybe not tomorrow, maybe not next month, maybe not in 6 months, but eventually we will get out of this. I'm not going to time the bottom. Timing the bottom, if you think you can time the bottom, put your money where your mouth is, sell everything and wait. The market bottoms on bad news. It doesn't bottom on good news, it bottoms on bad news. The question you need to ask yourself is, do you want to try to time the bottom, or do you want to just keep buying quality companies at great discounts? There will be a bottom eventually. The market's already down so much. Are you just going to keep waiting, or are you going to keep buying until the bottom comes in? You'll know. Stocks will fly up on good news. Maybe the bottom was yesterday. Maybe it wasn't. But you're going to buy when it's at a discount, and you're going to keep buying every time. That is how you make some serious effing money. I just wanted to make this video as kind of just a reality check. There's a lot of fear in the market today, but the real risk is you not buying great companies at great discounts. That's the real risk. That is where you will lose the most amount of money, is trying to play off the macro. Yes, the macro matters. Obviously it matters. But you trying to watch the headlines and outplay this market from the insiders that are making billions of dollars of 10 minutes before Trump tweets, that is where you're going to go wrong. You should buy when a great company is at a great discount. And that is it. I haven't been this excited in my time investing, but right now is unprecedented. The fact that all these great companies, it's almost like you can choose your return that you want. You can get a little more risk if you want, but let's start by looking at, honestly, one of the safest batches. We'll go look at Visa, right? Visa is one of the best companies in the world. And year to date, they are down 15.8%. Think about that. If they go back to the year to date, like what they were before this year, that is a 31% upside. Just for buying, you get 31% on your money, right? Unless you think Visa is going to get interrupted by Claude somehow. In my humble opinion, they're not going to. Not financial advice, sorry. But still, you're looking at a 31% upside from right here. It could keep falling, and then you're looking at a 40%, right? Let's go over to S&P Global. Another one of, it's recognized as one of the best companies in the world, in the stock market, to own. This is just a compounding machine. Everyone has to go to S&P and get rated. It's a toll booth, and this toll booth is not going to get disrupted, in my opinion. Let's look at their year-to-date. Year-to-date, they're down almost 22%. So from here, you can lock in a 44% upside if they get back to what they were trading at the beginning of this year. 44. If we go a year out, it's down 20%. Let's look at one more. What are we thinking? MasterCard. Let's go to MasterCard. MasterCard year-to-date down 15.4%. You're telling me MasterCard is no longer going to be a company, and they don't even trade at a crazy multiple. These companies were not trading. They're trading rich, right? Just because the stock market was hot, but now they're undervalued. People overreact. You get in, and then you make money. Okay, so MasterCard, that's 30% upside. Maybe you want more risk. Let's think about what's more risk. Let's get a software name. ServiceNow. We'll pull up ServiceNow. Year to date, down 35%. 35%. If I'm not mistaken, they have a 98% retention rate. That is otherworldly. You're not going to vibe code ServiceNow. ServiceNow down 35% year to date. If you buy ServiceNow right now and it goes back to what it started the year at, you're looking at a 70% upside, almost 71% upside, just for returning back to what it started the year at. I mean, say you want to get even more risky. Let's go. Let's go to Zeta. Zeta is a marketing technology company. Their big thing that I really like about the company is that they provide a 6x return on all money spent with them. Think about that. You give these guys $1, they give you 6 back. They have a crazy data moat. Okay, Zeta, year to date. Let's go. I mean, year to date, 30%. So that's a 60% upside. All-time highs, they're at 24, they're at 14. That's like what, 40 something odd percent down from all-time highs. If they go back to all-time highs, that's an 80% upside. SoFi, we'll just stay in the risk. This is just more risky than, obviously a lot more risky than Visa, MasterCard, and SP Global, but it's not crazy. These companies have great fundamentals, great financials. They're all growing and they're growing fast. S&P, or let's go, SoFi, sorry. SoFi year to date down 43%. So what I'm telling you is if they return to what they were at the beginning of the year, you're looking at an 86% return. This is, people pray for times like this. I mean, I remember watching on Twitter for the past years, people like, oh, we need a recession so bad so we can buy, everything's so expensive. We have it. And everyone thinks the world is going to end. People think the American empire is over. In my opinion, when this war ends, mid to late April, we're going to jump right back up and say, hey, okay, maybe you're a little more risk adverse. You don't want a lot of risk here. So let's pull up QQQ. Year to date, down almost 10%. Think about that, down 10%. If they return to back to normal, we're at a 20% gain. 20%. Please like and subscribe. Let me know what you guys would like to see in the future. Thank you.